Good evening and good afternoon, and welcome to the Accendo Traders Group. This is our weekend wrap-up trade plan for November 30th, 2008. AccendoTraders.com, effective video trade plans delivered daily. When we come together each night, we prepare ourselves for the next trading session. On the weekends, we add a couple of things. We always want to check our open positions. We always want to know what's coming down the pipe as far as news that could affect our trades. But we also want to see what some of the experts are saying in our newsletters or blogs. We want to check the sectors and see if any trends are starting or continuing. Check the indexes and see what's happening on there with support and resistance. We always scan for new trades and set alerts for those new trades. But most importantly, by having a trade plan, we can cut our time so that we can spend time with our family. So the week that was, certainly we had a abbreviated trading week with our holiday session. Thanksgiving, happy Thanksgiving to everybody. Hopefully everybody has something to be thankful for. We all do. And you can see that the market ended up for the week. We actually had the market rally for 5 sessions in a row. And the week was kind of started off with the bailout of Citigroup over the weekend. The government backed basically $300 billion of their assets and invested another $20 billion into Citigroup. There's also the announcement of the new economic team, which was kind of hinted on Friday, which started the rally, and they were actually announced on Monday. Heck, almost every day this week, there was a new member introduced of the new economic team. And also there was $800 billion thrown at the credit market to try to, again, get lending going, which did reduce interest rates, mortgage rates. It's kind of confusing because you've got the TARP, and there's $800 billion there, or $700 billion there, and then you've got this other thing going over here that's $800 billion over there, and that was from the New York Fed. I mean, it was just, there's a lot of money being thrown out there. The good thing is that with all of this, money being thrown at the financial sector, we did have the financial sector participate in this rally, which is good because we know that it's about 23% of the S&P 500. So when they rally, the market tends to rally with them. We had Citigroup up 111%. And Goldman Sachs was up 48%. So it was good for the market. And the other thing that's interesting is, of course, we did have the terrorist attack in Mumbai. And normally when a lot of these geopolitical things happen across the world, that's actually has a negative effect on the market, and this one did not. Certainly we have our prayers for all families that are involved in that terrible event. But it is interesting to see that the market moved without that. The other thing that's interesting is that, this is not the first money thrown at this problem. It's not the first bailout. And every other bailout has failed. It rallies for a day and then the market pushes it down. So the market rallying for 4 or 5 days here, is it saying that it finally believes, that it's finally buying into this whole bailout process? That still has to be told. We'll have to see. Obviously, with the shortened week and abbreviated days and no days, the volume was certainly light this week, which could have helped with the move. So we'll have to see as tomorrow comes in and we have all the traders back in the market. As you can see this week, our big things here is we do have ADP employment, which is a precursor to Friday's non-farm payroll numbers. And so we can get past that. Even the beige book has a little bit to do with the next policy meeting for the Fed, FOMC. So we do have some things going on this week. We have nothing on the earnings front, really, nothing tomorrow. This week we have Beasley and Toll Brothers, so we'll hear how the buying, the mortgage, the home building front is going. We also have Sears this week, which could talk into the retail. And we'll probably have some data coming out about how well Black Friday was, whether or not people came out. Now, we heard some horrible stories about Walmart, what happened there, but we'll see how Black Friday numbers come out. And then we have Black Monday coming up tomorrow, which is the retail online version. So we'll have some data coming out about how good, because we know that this is when most of our retail companies make their money. So as we look at our sectors, you're going to see the majority of sectors are going to look like this. This is the agriculture sector, and they're based, of course, again, we talked about the rally over the past couple of days, and most of them are sitting at the 20 moving average. However, there are a couple that have even taken the move beyond that. First up is energy, and you can see that energy has popped up above the 20 moving average. We also have gold. Check out gold. Now that is some strength in the market. It's already up here to the 50 moving average. Now we also had financial. Now remember we talked about the financial sector participating in this rally. And here you can see that this one's rallied to the 20 moving average. We also have the brokers in the financial sector. And here you can see that the brokers have rallied past the 20 moving average. Check out insurance, again, the financial sector. Again, here you can see that it's popped its head right above the 20 moving average. Here's manufacturing. It has also moved its head above the 20 moving average. Next, we're going to look at computers. I'm sorry, not computers. We're looking at utilities, and you can see that they've also almost made it to the 50 moving average. And here on our breadth indicator, we can see that the market is showing us that about 70% of the S&P 500 is in the buy category. We're above our adaptive moving average here. So things are looking good, but remember that the resistance of the 50 moving average is just above. Okay, so now we're going to go to the education portion of our video, and we're continuing our talk about really understanding risk and accepting that risk. And what Mark Douglas says in the book is Trading in the Zone, and what he basically is saying here is that we as traders have to understand that when you place a trade, you're not only just placing a trade, but you also have to accept the fact that the trade may not work out. And when you see opportunities in a market, you have to be able to enact upon what your system tells you to do. However, when you're not able to accept risk, then your fear and your emotions will kind of blur out or fog out opportunities that are available to you because you don't want to be wrong. You don't want to accept the risk. So what Mark basically says here is that you have to be able to make yourself available to the opportunities that the market provides. However, you cannot have any expectations upon what the market's going to do. You have to accept that the opportunity has now presented itself. I'm going to take that opportunity, and whatever happens, happens. It may work out, it may not work out, but you cannot put any expectations upon the market. The market has to be able to do whatever it is it's going to do. So you have to create this type of mindset that you are not affected by the results of your trade. And I know that doesn't make sense. And I know it's certainly hard to develop, but that is the internal struggle that all traders go through. It is the cycle of life. And that's where the professional traders separate themselves from those who are learning to trade. And even if you're making money, you may not be a professional because you may not have developed this mindset and you're still learning to trade. The successful traders have broken through because they're able to trade without fear. And if you're not fearing anything, then you're not threatened by the market and you don't have to put expectations or limitations on the market. You're able to embrace the responsibility and you're able to embrace the risk. And most of those traders who are successful, we don't get to that point to where we're able to accept the risk until we lose a lot of money. And I will say what happens is either you lose money and you sit down and figure out why you're losing money and you figure out what you need to do to make money, or you stop trading. That's typically what happens. You know, that's what happened with me. And that's what happens what I see. Some people just quit. Other people jump to another trading style, but they never mastered their mindset. You can keep jumping from trading style to trading style, but until you develop the right mindset, you're going to eventually lose because you haven't changed how you make decisions and you haven't changed how you interact with the market. To get the full version of our video trade plan, this is just our abbreviated version. To get the full version, you got to get our podcast, AccendoTraders.com, subscribe podcast HTML. You can also get our daily stock picks, our video trade plans that we put out on a daily basis. And there's our link to do that. Check out our blog to also get our posts on a daily basis. And our 30-day challenge is still going on. We're going into the bonus section where we will be posting trades every day of the month of December. Thanks, guys, and I will see you next time.